Hello, everyone. In this lesson, I will cover InsurTech and risk management. I'll begin by explaining what InsurTech is, and then describe how InsurTech is disrupting insurance, explain the benefits of InsurTech and the impact of InsurTech on risk management, and then I'll wrap up by discussing challenges and opportunities within the InsurTech space and discuss the future of InsurTech. Let's begin by clarifying what InsurTech is. InsurTech is the short form for insurance technology, and it refers to the use of innovative technologies such as AI, artificial intelligence, big data analytics, blockchain, and machine learning to improve and automate traditional insurance industry products and services. Now, improving and automating the traditional insurance industry products and services has several benefits for the customer experience and for the insurance company's efficiency. Let's consider two key characteristics of InsurTech companies to help us understand InsurTechs even better. The first key characteristic I'll touch on is that InsurTechs combine insurance and technology to create new products, services, or business models. And by so doing, they make insurance more efficient, which I alluded to earlier, and they also make insurance more personalized and more accessible. Second key characteristic of InsurTechs is that they enhance customer experience, streamline operations, and create personalized insurance products through the application of cutting-edge digital solutions. And this circles back to InsurTechs using innovative technologies. Let's now discuss the evolution of InsurTech. InsurTech emerged from the broader fintech movement, which disrupted the financial services industry through the implementation of technology. The insurance sector, historically characterized by manual processes, lengthy paperwork, and complex procedures, was ripe for disruption. InsurTech companies, often startups, brought a fresh perspective to an industry that had been slow to adapt to technological advancements. Let's now look at the key cutting-edge technologies used by InsurTech, and we'll start off with AI and machine learning. AI and machine learning algorithms are used to analyze large data sets to predict risks. So for example, we can use it for fraud detection. It can also help to automate underwriting processes and personalize insurance products. And they enhance the accuracy of claims processing. And as I indicated earlier, they enhance fraud detection. Next, we'll look at blockchain. Blockchain technology ensures transparency and security in insurance transactions. Blockchain enables smart contracts, and these are contracts that are self-executing without the need for intermediaries. And as we know, smart contracts, or rather smart contract, let's clarify that, automate policy execution and claim settlements because they are self-executing. and they reduce administrative costs and errors. Again, based upon the point made that there will be no need for intermediaries when using smart contracts. Next is the Internet of Things, or IoT. So IoT devices such as telematics and wearable health monitors provide real-time data that insurers can use to evaluate risks more accurately. Now, this supports a data-driven approach and allows for dynamic pricing and customized policies. Next is big data and analytics. Big data technologies can be used to analyze large amounts of structured and unstructured data to identify patterns and trends. Using big data and analytics, insurers can better understand customer behavior, predict future claims, and develop targeted marketing strategies. Next is mobile and digital platforms. One key benefit of mobile and digital platforms is that they offer convenience to customers. So customers can conveniently access insurance services from their mobile phones and various apps. Now, in addition to that, mobile and digital platforms streamline policy purchases, claim submissions, and customer support interactions. So all these processes can be accessed on mobile and digital platforms. Let's now discuss the benefits of InsurTech. I know we already touched on some of these benefits, but let's formally discuss the benefits of InsurTech. And I'll start off with the benefit of enhanced customer experience. InsurTech empowers customers with user-friendly interfaces, transparent pricing, and personalized policy options. With digital platforms, customers can easily compare quotes, purchase policies, and manage claims, all from the convenience of their smartphones. Next benefit we would consider is improved risk assessment and management. Now, InsurTechs can use advanced data analytics and AI to evaluate risks with greater precision. This leads to more accurate pricing of premiums and minimizes the likelihood of underinsured or overinsured policies. By leveraging IoT devices, that's Internet of Things devices, insurers can monitor real-time data to proactively manage risks and offer preventive solutions. The next benefit I'll touch on is cost efficiencies. Now, InsurTechs can use automation and digitalization to reduce administrative costs, streamline operations, and minimize human errors. Recall that smart contracts on blockchains eliminate the need for intermediaries, and that reduces transactional costs, and it speeds up claim settlements. Next is fraud detection and prevention. InsurTech solutions employ sophisticated algorithms to detect fraudulent activities by analyzing patterns and anomalies in data. This helps in identifying and preventing fraudulent claims, saving insurers significant amounts of money. The last benefit I'll touch on is innovation and agility. InsurTech companies, pretty much driven by innovation, can quickly adapt to changing market conditions and customer preferences. They experiment with new business models, product offerings, and distribution channels, thereby fostering a dynamic and competitive industry. Having talked about the benefits of InsurTech, let's now shift the discussion to key challenges and risks facing InsurTechs. And the first risk I'll talk about is data privacy and security. Now, because there's heavy reliance on big data, AI, and analytics by InsurTechs, it raises concerns about data protection. Now, let's note that cybersecurity measures must meet regulatory expectations to prevent data breaches and fraud. So there are requirements for cybersecurity measures to be established such that data breaches and fraud will be prevented. And failure to do so would result in reputational and legal penalties, because any data breaches and fraud has severe reputational consequences for the InsurTech firm. And then, of course, on the regulatory violation perspective, there will be legal penalties for such data breaches and fraud. Staying with data privacy and security, note that compliance with these data protection laws and other related regulations can be a key challenge as far as having resources put in place and ensuring that there is compliance. So that's a key challenge for InsurTechs. Another key challenge for InsurTechs has to do with complying with consumer protection and transparency regulations. As InsurTechs use AI-driven pricing and underwriting models, let's take note that these models must avoid bias and discrimination in order to comply with anti-discrimination laws. Another key challenge facing InsurTechs is the different regulations across different countries. Now, as a result of different regulations across different countries, this makes it particularly challenging for InsurTechs to expand internationally. Next is evolving regulations and uncertainty. Now, regulations are constantly and continuously being updated in order to address risks that keep emerging. For example, we have blockchain-based smart contracts or parametric insurance. And as the regulatory landscape keeps evolving, there is uncertainty because InsurTechs must comply with these new regulations. And that presents a key challenge for InsurTechs. We're now going to discuss the impact of InsurTech on risk management, which is an important area for insurance companies, pretty much the insurance sector. So what's risk management within the insurance landscape? Risk management involves identifying, assessing, and mitigating potential risks. And this is at the heart of what insurers do. That's all the insurance companies. Now, insurance companies or insurers rely on historical data. They use actuarial models and expert judgments to evaluate risks and determine appropriate coverage. Now, InsurTechs enhance these traditional risk management practices by incorporating real-time data predictive analytics, and automation. And this enables the prediction of future risks and trends with higher precision. So we can now clarify the impact of InsurTech on risk management as follows. InsurTechs typically reduce operational costs and they ensure greater efficiency. InsurTechs enable the analysis of customer behavior in more effective ways and also to identify potential risks and tailor coverage more effectively. And InsurTech solutions help to implement robust security measures to protect sensitive data. Let's now discuss digital twins, which is an interesting tool that InsurTechs use with several benefits, such as helping with more effective risk assessment and underwriting, helping with claims processing and making it more effective, and also helping with fraud detection, asset monitoring and maintenance, and enhanced risk engineering and claims. So what are digital twins? Now, a digital twin is a digital model of a physical entity like a product, system, or process. InsurTech digital twins leverage virtual replicas of physical assets, processes, or systems to revolutionize insurance by enabling enhanced risk assessment, streamlined claims processing, and improved fraud detection, which ultimately drives better efficiency and business outcomes. Digital twins allow insurers to simulate various scenarios and analyze risks more accurately, leading to better underwriting decisions. As far as claims processing is concerned, digital twins replicate policyholder data and use 3D models. And this enables insurers to expedite assessments, improve decision-making, and streamline claims processing. Now, as far as enhancing or improving fraud detection is concerned, digital twins can recreate accident scenarios, identify fraud patterns, and verify the authenticity of claims, thereby reducing fraud and associated costs. And digital twins can also help insurers monitor the condition of insured assets in real time, and they can predict potential issues and optimize maintenance schedules, thereby reducing losses. We'll wrap up our discussion by looking at future trends within InsurTech. And I'll start off with AI and automation. Now, but before then, let's make this point that the future of InsurTech holds immense potential for further innovation and transformation in the insurance industry. Now, as technology continues to evolve, we can expect the following trends to shape the future of InsurTech and risk management. And the first we're going to talk about is AI and automation. AI and automation will continue to play a pivotal role in streamlining insurance processes from underwriting to claims management. Now, insurers will increasingly rely on AI-powered chatbots for customer support, automated risk assessments, and predictive analytics for personalized policy recommendations. Next future trend within InsurTechs that I'll discuss is personalized insurance products. Now, InsurTechs can use AI to develop personalized insurance products. And let's also take note that customers will have the flexibility to choose coverage tailored to their specific needs, whether it's for short-term travel, gig economy work, or unique health requirements. All because InsurTech will enable insurers to offer highly customized and on-demand insurance products. And once these products are offered, customers will have that flexibility and they can choose coverage that is tailored to their specific needs. A key future trend within the InsurTech space is blockchain and smart contracts. Now, blockchain technology will drive trust and transparency in insurance transactions. Smart contracts will automate policy execution, and that will reduce disputes and ensure accurate and timely claim settlements. Next, future trend is the integration of Internet of Things and wearables. The use of IoT devices and wearables will become more widespread, providing insurers with real-time data to assess risks more accurately. Now, this data will enable proactive risk management and the development of innovative insurance products that reward healthy and safe behaviors. The last future trend I'll talk about is the collaboration between InsurTech and traditional insurers. Now, we expect that in the future, such collaboration will become more prevalent, and established insurers will leverage the agility and innovation of startups to enhance their services, while startups will benefit from the industry expertise and customer base of traditional insurers. And that brings us to the end of the InsurTech and risk management lesson. I hope you've enjoyed this lesson, and I look forward to delving into other areas of fintech with you.